I recycle properties. What does that mean? I turn junk houses into recycled gold, recycled green. So today we're going to talk about mortgages. Hello again, my name is Bob Irwin and I'm with MB Enterprises and I recycle properties. What does that mean? I turn junk houses into recycled gold, recycled green. So today we're going to talk about mortgages, but I would like to wrap up the last episode where we talked about landlording and the 7 categories. So the 7 categories were race, color, religion, sex, national origin, family status, and handicap. You cannot discriminate against them. Same thing with mortgages as well. There's a way to get around that when landlording and leases. Make yourself a little spreadsheet, score particular tenants on a score of 1 is bad, 5 is excellent. Put that into a spreadsheet and then score your specific tenants or your prospective tenants. Got that right this time. Your prospective tenants. Give them a number. Keep it number-wise. Don't discriminate. So, getting on to mortgages. Okay, so maybe you found a property, you put it under contract, or you're looking at properties and you're trying to put something under contract, but you don't know where the money is going to come from. So here's an idea. Number 1, guard your credit score. Find out what your credit score is, whether you have access to it through a credit card, whether you have Credit Karma, whether you have Credit Sesame. Credit Karma, Credit Sesame are free. If you have a Discover card, that will show you your credit score. If your credit score is in the 600s, it is possible, it is very possible to raise your credit score from the mid 600s to 700s and more. I've done it. Personally, I've done it. So guard your credit score. Next bullet. Develop relationships with your bank. Everybody should have a personal banking account as well as a business banking account. Sometimes they're in the same bank, the same institution. Other times they're not. What I suggest that you have is 2 different banks. You have a relationship, a long-standing relationship with your personal banker, guy that you put your W-2 check in, whatever the case might be. Go down the street, find a savings and loan, find a credit union that you feel comfortable with. Talk to your friends, family, relatives, other partners. Find out who is giving decent information with regard to and different balances, good balances, and so on and so forth. Someone that's not costing you money to hold your money. That's a good one. Someone who is not costing you money to hold your money. Put a few dollars in there and develop a relationship with the vice president of the bank. Come in with the banker, the tellers, get them to know you by name, such that when they have a product or a circumstance that they are looking to HELOC you, give you home equity loans, things of that nature if you're a homeowner now, such that you can develop that relationship with them and they know who you are. Join a local RIA. Join a local RIA. Those folks know who the lenders are, whether they be hard money lenders, whether they be RIA lenders, whether they be self-directed IRA lenders, folks of that nature. A little tongue-tied here, but find out who they are. Find out who the lenders are in your local RIA and develop relationships with them. Guard your credit cards. What I mean by that, if you have credit cards with a total balance, not a balance, but a total available credit of say $10,000, you don't want your balance on any one of those, your cumulative balance on any one of those accounts to be more than 33%, more than $3,300, more than $3,500. Try and keep that balance down. debt to income ratio is very important when folks are lending you money. Cultivate relationships with friends, family. Tell them what you do, show them what you do. Take them on a guided tour. If you have a property that you're rehabbing, if you have a property that you're renting, drive them by it. Some of these folks in your family may have money that's sitting on the sideline in the bank that's earning like 0.011%, something of that nature. And they're looking for a different mechanism to put money into that can earn them single digits, even double digits of interest. And you can pay them that, but the numbers gotta be right. Tell folks, friends and family, what your goals are, why you're doing what you're doing. Tell them how you wanna help your family, your kids, your wife. Tell them how you've been paying down your bills. Show them how you've been doing it by, again, taking them on a tour of a given property or a given neighborhood that you're invested in. Make them an offer to become a vested interest, have a vested interest in that property. What do I mean by that? When you flip this house, they get an extra, if they lend you $10,000 at 10%, that's $11,000. Tell them that, hey, if we can do this and you get your 10%, maybe I'll throw you an extra grand or something of that nature. Maybe I'll make you a partner. Maybe I'll bring you along and show you what I'm doing to make this deal happen. But the numbers gotta work. Private money. Private money is folks that you may or may not know that have money, that are looking to make an investment. As I mentioned before, they got a few $1,000s sitting in a savings account that's not drawing any interest. Maybe they have a self-directed IRA and they can lend you money out of that IRA. You have your business account set up. You have a EIN number. You have your articles of incorporation. You have all of the documentation for your LLC. You can ask them for money. Provide those documents to these folks and pay them on a timely basis. They may lend you money. You got to prove it though. You got to prove it. Another way to avoid perhaps going to the bank, to your local Wells Fargo or Bank of America and asking for a loan or a HELOC or something of that nature, always ask the seller if they would consider owner financing. Owner financing is a great deal. You can buy a property, say for instance, property is $10,000. You can give them $1,000, pay them a monthly fee for the next couple of years, and you can have ownership of that property whereby they can defer taxes for a while. You say for instance, over a year, you pay them that $1,000 over the 12-month period, whatever that number is, and you agree upon. You can pay them that money over that 12-month period, and you have ownership of the property. They get still a monthly income from it, and they're not looking at the taxes for a year, maybe a year down the road, something of that nature, two or 3 years down the road. 1 year may not be enough, but you get the drift. You can defer those taxes to the seller by offering them the opportunity to do a seller finance deal. You can flip the switch as well, and you can also sell by being a seller financing circumstance. Give you a quick story. I purchased a property, had a tenant in it. The tenant's, let's say, paying $500 a month, and he's all good with this 3-bedroom, 1-bath house. I still owe maybe $20,000 on this property. The property's worth maybe $35,000, something of that nature, 15 above that. My loan is coming due on this $20,000. My point is simply this: I have a conversation with the tenant one day, and he's telling me about he'd like to own a house. He'd like to own the house he's living in that he's paying $500 a month rent on. and it's a nice little house. You know, we did some work to it, so on and so forth. Bottom line is that he had $20,000 laying in the bank. That was a solution to my need. That was his down payment, and now he's paying me a little bit better than $500 a month to create a mortgage. It won't last forever, but it's income for me. He owns the house, he pays the taxes, he pays the insurance, and he does the repairs on the property. I just collect the principal and the interest. So you can sell by owner financing as well. Develop a relationship with hard money lenders. There are plenty of hard money lenders around that don't require personal data. They will lend on the property itself. XYZ Main Street is worth $100,000 after repair value, so on and so forth. They may lend you enough money to purchase a property, to maybe even repair it, to get a little bit of money coming into you as cash flow, but their interest rates might be quite high. So as I've mentioned in the past, you need to have a spreadsheet and you need to have a clear and precise exit strategy for that property going into it before you sign up with that hard money lender. They may charge double-digit interest, say for instance 12, 15, 18%. But if the numbers work and you can figure out a way to make money on that, you've talked to a mentor like me, you've talked to a mentor, and you can figure out a way to make money on that, it's very possible to do so. Keep track of whom you're applying with, because in a lot of cases, someone may collect your personal data and do a soft pull on your credit report that may or may not require points against your credit score, but a hard pull against your credit score against your credit report will definitely pull down your credit score. So if you're in the 600s and you need to be above 700, watch out for sure who you're applying with. There's going to be points involved, there may be a down payment involved, things of that nature, but make sure you know that they're either going to pull soft or hard to make sure that your points on your credit score aren't affected that way. Practice speaking to lenders just like you would practice speaking to prospective tenants. Have your details in hand, notes, photos, spreadsheets. Be able to articulate the deal in front of someone on 60 to 90 seconds. That's your elevator pitch. And be able to leave them with, say for instance, if you're going to a hard money lender, be able to send them photographs of that property in its current condition, what you're going to do to it, why you're going to do to it, all of these things. The last thing that you want to tell somebody, all I got to do is, when somebody comes to me and I'm a lender and they tell me, Bob, all you got to do is, I kind of shut down. The blinds close, the garage door comes down, and they start to lose me. Have facts. If you're a wholesaler, and we talked about this once before in a previous episode, my point is that have a plan. Have a home inspector have gone through that property and told you every little nook and crack that they can find wrong with that property, so that you know exactly what your plan is going to be to get it fixed. So, having said that, what you want to do when you approach a mortgage lender, any lender, is that you want to think like Shark Tank. You want to be able to present to 4 or 5 lenders at the same time your story with facts and figures to make it work. That's the point. That's what mortgages is all about. You want to have your facts together, your numbers, your photographs, a story, a picture, so that you can paint it in 60 to 90 seconds where these folks will lend you money. They'll feel confident with you. You've done it before. You have a portfolio. You have this information at fingertip. You have all of the details that makes you successful at the end of the day. Focus on the number. All you got to do is, doesn't work. Have facts and figures. So, to wrap this thing up, Guard your credit score, know what it is all the time, build relationships with lenders, whether it be hard money lenders, IRA lenders, said it right that time, and also personal bankers. Know your personal banker, your business banker, so on and so forth. So remember, MB Enterprises recycles properties. Have a good evening.